Okay, welcome everyone to Preservation of Wilson's webinar about state, federal, and local tax credits. We are joined by two panelists, Chip Futrell, who is president of Preservation of Wilson, who has served on the City of Wilson's Historic Preservation Commission and who owns a historic home here in Wilson. We also have John Wood, Preservation and Restoration Specialist for the North Carolina State Historic Preservation Office in the North Carolina Department of Natural and Cultural Resources. I'm going to be turning the program over to them very shortly, but I wanted to say a few words about Preservation of Wilson. We are a nonprofit agency run by volunteers, mostly people with a passion for historic properties. Wilson County has many beautiful homes and commercial buildings from many eras, and our main goal is to spur people's interest in owning these properties, restoring or preserving them, and keeping them for years to come. Preservation of Wilson will often step in and buy a property that might be in distress or in danger. We will also work to stabilize it and find it a new loving owner. We currently have a house at 209 Daniel Street. We acquired it earlier this month and have already made great strides to get it ready for a new owner. Anyone who is interested may come to our open house on Tuesday, July 27th from 5:30 to 8:30. Again, this is 209 Daniel Street here in Wilson. Preservation of Wilson members and the public are all invited, and refreshments will be provided. So in order to reduce interruptions as we move along the program, we have all attendees muted, but after John and Chip have completed their presentations, we will give you all an opportunity to ask our panelists questions in the question and answer part of the program. We just ask that at the bottom of the screen, you have a couple of options, and we just would like it if you would enter your questions into the chat box, and we will go through them as they come in once the presentations have ended. So without further ado, I would like to turn our presentations over to Chip Futrell.
Well, good evening, everybody. And I wanted to say thank you for taking the time to host this webinar. And John Wood, I want to thank for taking the time to be a part of this. You know, we did a webinar just a few weeks ago, generally about restoration in the Wilson area. And the one topic that kept coming up over and over is funding. And the different types of funding. And so there's a lot of interest about funding that's available. And so what John and I want to talk about are the various options that we have available. John is going to spend the bulk of the time today talking about the state tax credits, which I think are of the biggest interest. I wanted to spend just a few minutes talking about some other funding options that are available to you. So I'm going to share my screen. And we'll pull up a short little PowerPoint that I put together about funding sources that we have. With Preservation of Wilson, we do have, excuse me, I advanced too far. Let me go back. We have both matching and non-matching grants. Just one second. That advanced too fast for me. I'll just leave it in this mode if you don't mind. What's been most popular over the years has been our matching grant program, and so these are for visual improvement. They are for the exterior of a home. The limit is $2,000, up to $2,000 per homeowner or per property per year. And it can be virtually anything on the exterior of the home, including landscaping. It is eligible, the eligibility is to those who live in historic districts. The program, if you want to be a part of it, you have to be pre-approved prior to starting on the project. And there is application available online. The non-matching grants are very similar, but it has a lower dollar amount. The non-matching is for smaller projects, like somebody who just wants to paint their front door or wants to install a few plants, that kind of thing. And the dollar limit is $500 per homeowner per year. Now, in both cases, receipts obviously are required, but this is one in which the expense, what you pay or what you spend, is not does not have to be matching. It also is eligible to for those who live in the historic districts, and there are 3 in Wilson. But like the other program, it must be pre-approved, and there is an application available on the website. And so I also want to mention that the city has a loan program available. I know John Mork has asked me to mention this, and this is a new program. I'm excited about it as a homeowner. But this is a program that's not administered by Preservation of Wilson. This is a program administered by the city. It is available to qualified homeowners in the historic districts of Old Wilson, Broad Keenan, and the West Nash districts. There is more information available on the city's website, and a couple of the items I'm sure that you're going to be interested in as an applicant is what is the term and what is the interest rate. Right now, I believe that there are 3 different terms that are available, but those rules are subject to change, I'm sure. And so you'll want to read the eligibility and the rules prior to applying. But if you're interested, please contact the City of Wilson, specifically Dana Corson in the Historic Preservation Office, to apply for that. There are also some other funding sources that are available. These are on our website, the Preservation of Wilson website. The first one I hope that you don't have to use, and that's brownfields. That's actually federal flow-through money that is used to clean up sites like old gas stations and other chemical areas where there may be chemicals in the soil. But I bring this up because sometimes there are old gas stations that existed in the historic district beside historic homes. And so I would just want to make folks aware that that's there. There's also the North Carolina Homestead exemption that you may qualify for. And also First Citizens Bank has a purchase and rehab loan program that is unique to them. And so this information is on our website under our services. So if I may pull that up, let's see. That's the city's website, I believe. And I had the website up just a minute ago, but anyway, that's the URL right there, preservationofwilson.com /our services. So I wanted to mention those options that are available to you. But the biggest reason why we're here, and I think the most enthusiasm that we have, is to learn about the state tax credits. And so before I turn this over to John, I wanted to let you know that as a homeowner, I took advantage of that several years ago. I've lived in Wilson for about 12 years or so. And so the previous owners actually had put in an application for the tax credits. So we finished that application. A lot of times when you work with a state agency or a federal agency for that matter, it may feel a little bit intimidating because of the documentation, but basically everything that the state is asking for documentation-wise is common sense. You know, what are you going to do? Um, Documentations of receipts and photographs. And so those are the kinds of things that we submitted to the state, and it's been a wonderful program. And so I'm sure that John is going to make himself available here after this presentation to help any of you. And certainly I'm available too to help guide people through the application process. So I want to, with that said, I'd like to turn this over to John Wood, who has been an immense help to me over the years and is also a friend, I have to say. Great guy, just a wealth of knowledge about this program. And so let me turn this over to you. And John, I may chime in if I have a question or if I want to prompt you about something you're talking about. So let me turn it over to you. Thank you, John, for being here.
All right, thanks, Chip, and thank you, Ann, for inviting me here. I want to thank Preservation of Wilson for giving me this opportunity to pass along some information to you all that might be helpful for coming up with funding sources to rehabilitate your historic house or your commercial business. One of the things that I'll mention as an aside from what Chip was saying before I get into the tax credit part is y'all in Wilson are certainly very fortunate to have things like those facade grants and those loans that Chip had discussed. There are a lot of communities out there that don't have that type of thing. So it's really exciting to see communities who are making an investment in preservation and putting their money where their mouth is to make it happen in the city. So that's really kind of neat. But the one thing I'll mention that kind of can piggyback on what Chip had talked about, there's a program called the 203K Mortgage Program, which is a program that's done through HUD. And what that is it can be for people who are first purchasing a house or owners who want to refinance and create a mortgage for the house. But what it does is that program is set up where it's a combined mortgage and construction loan that are geared towards the rehabilitation of properties that wouldn't necessarily meet the standards or the requirements for average construction loans. So these are properties that are kind of down on their luck. And if you go to HUD's website or just type in 203K mortgage, there are a number of different banking institutions that offer this service, but that might be something that would be a way of funding a property if you want to go through kind of a mortgage scenario. So I'm going to share my screen now and switch over to talk to y'all about the both federal and state rehabilitation tax credits. I can get this to go into video mode. So the tax credits are one of the major benefits of being in a National Register Historic District or having your property individually listed in the National Register of Historic Places. And these tax credits provide a financial incentive for rehabilitating and maintaining historic buildings. And the purpose of the federal and state rehabilitation tax credit program is to encourage private reinvestment and rehabilitation of historic properties in downtown business districts, residential neighborhoods, and rural landmarks throughout the state by providing income tax credits to taxpayers who sensitively rehabilitate historic structures. And the goal of these tax credits is not to preserve the structure as a museum, but to give historic buildings and homes a place in the contemporary real estate market, thus guarantee their continued use and economic vitality. And these tax credits help revitalize historic commercial and residential districts, as well as urban and rural properties throughout the state. So through the efforts of the state historic preservation offices and the National Park Service, the federal and state tax incentives for rehabilitating historic buildings have become one of the nation's most effective programs to promote both urban and rural revitalization and encourage private investment in historic preservation. In addition to the rehabilitation tax credits, they support the rehabilitation of underutilized schools and warehouses, mills, residences, and commercial buildings. We've seen it stimulate local economic activity, increase jobs and housing, promote smart growth. A lot of communities use it to boost heritage tourism. These tax credits can stabilize and increase local property tax bases, as well as generating greater sales and property and income tax revenues. Since the inception of the tax credits in 1976, tax credit program continues to be an effective stimulus for economic recovery in older communities. In North Carolina, more than 3,900 projects have been completed to date that have resulted in an estimated $2.9 billion of rehabilitation expenditures statewide. The rehabilitation of North Carolina's historic buildings increased dramatically following the 1998 expansion of the state tax credit. And since 1998, more than 3,200 projects of income and non-income producing properties with a total estimated rehab cost expenditure by private investors of about $2.7 billion have been completed. So a significant amount of money has been put into preservation because of these tax credits. From 1978 to 2018, nationwide, about $162 billion in historic tax credit related rehabilitation investment created 2.677 million jobs and $176.2 billion in gross domestic product, and 30% of that was in the construction sector. Within the state, we estimate that since the 1998 state credits started, rehabilitation costs expended on historic tax credits within the state have created more than 2,300 new full-time jobs. And likewise, during the recent recession, federal tax credits remained a strong catalyst for job creation and economic growth in older communities throughout the state. In addition to the powerful economic benefits of historic preservation, the North Carolina rehabilitation tax credits encourage the use of existing buildings, reducing the need to expand public services and infrastructure, which saves taxpayers dollars. Historic structures such as schools, textile mills, and tobacco warehouses are all being reclaimed for housing, retail, and office uses. And I'm sure y'all are familiar with the Coon School there in Wilson. That was done as a rehabilitation tax credit a number of years ago, and it was really a super project for Wilson. Since 1976, the National Park Service has administered the historic preservation certification side of the income producing program in partnership with our office, the State Preservation Office. Our office administers the program at the state level with final authority resting with the National Park Service. The IRS and the Department of Revenue, North Carolina Department of Revenue, administer the tax and finance side of the income producing program. And we always recommend that taxpayers consult a professional tax advisor, the IRS or the Department of Revenue, for help in determining the tax or other financial implications of using the credits, just to make sure that those credits can actually work given your financial situation. So what is a tax credit? The tax credit differs from a tax deduction. A tax deduction simply lowers the amount of your income tax, which is subject to taxation, where a tax credit provides a dollar for dollar reduction in the amount of income tax owed. So if you have a tax bill of $10,000, a $4,000 credit will reduce your tax bill to $6,000. So it's a good incentive to do stuff. Properties that are eligible to receive these tax credits must be a certified historic structure. And a certified historic structure is defined as a building that is either listed individually in the National Register of Historic Places or as a contributing property in a listed National Register Historic District. Now, there are two types of tax credits that are available, and the types of credits that you would actually take is going to be based on the use of the building. So there's one credit for income producing historic structures and a different credit for what they consider non-income producing historic structures. So income producing structures include commercial buildings, mills, industrial buildings, apartments, or rental residential properties that are placed into service to generate income. The tax credit for income producing historic structures consists of a 20% federal tax credit for qualifying rehabilitations of income producing certified historic structures. And then there's a piggyback state credit of between 15 and 25% for qualifying rehabilitation of these income producing certified historic structures that qualify for that 20% federal credit. So the combined state and federal credits will reduce the cost of a rehabilitation of an income producing historic structure by between 35 and 45%. And the range in the percentage of the state credit is due to two things. First of all, there's a tiered based income producing credit and then a bonus credit. So the base credit is determined by the project cost. A 15% state credit for all projects with up to $10 million in qualified rehab expenses, a 10% state credit for projects with 10 million to 20 million in qualified rehab expenses, and then there's no state credit for projects over 20 million. So if all of you out there with deep pockets wanted to spend more than $20 million, it's not going to be of much help to you. Now, there are two bonus credits that are available. There's a 5% development tier bonus for projects in tier 1 or 2 counties, and a 5% targeted investment bonus. And this is for buildings that are manufacturing or agricultural related, or private or public utility. And it must be a certified historic structure and have been vacant for at least 2 years preceding the date of eligibility certification. Now, the county tier designations are done by the North Carolina Department of Commerce. And as you can see from this map, Wilson is a tier 1 county. So anybody who's going to do an income producing project would get that 5% tier development bonus. So for income producing projects, the maximum state credit that you can ever get is $4,500,000. And that's based on a $20 million project of a vacant manufacturing building in a tier 1 or 2 county. So to put the tax credits into a better perspective, for example, if you have $100,000 in rehab expenses and receive a 20% federal credit plus the 15% state credit, that's going to equate to $35,000 in tax credits. And again, that's a dollar for dollar tax credit. So that's going to reduce the cost of that $100,000 rehab by $35,000. Again, a very good financial incentive. Now, the rehabilitation of the historic structure must be substantial. And for income producing properties, the rehabilitation expenses have to exceed what's known as the adjusted basis of the building within a 24-month period or in 60-month period for projects that are phased. Now, the adjusted basis, this is an IRS term or an accounting term, which is basically the purchase price of the building plus any previous capital improvements minus depreciation already taken. And that basis does not include that part of the cost of the property that's allocable to land. And again, this is all probably way in the weeds as far as an accounting standpoint, but basically your rehab expenses have to exceed the value of the structure itself, exclusive of your land. All rehabilitation work has to meet what's known as the Secretary of Interior standards for rehabilitation, and the applications for income producing structures are subject to joint review by the State Historic Preservation Office and by the National Park Service, again with final authority resting with the National Park Service. The project also has to be a certified rehabilitation, which means it has to meet the Secretary's standards as determined both by our office, the State Preservation Office, and by the Park Service. Now, the qualified rehabilitation expenses include hard rehabilitation costs incurred in work upon or within an existing structure, and soft costs such as a consultant's fee or architect's fee, dumpster rental, that type of stuff, permitting fees. The credits cannot be claimed against the cost of the acquisition of the property, for any new additions, for site work, or for personal property. So you can't buy furniture and that type of stuff to go in the building. So how do you take the credits? An owner for income producing property must begin taking the credits for the year that the project is completed and placed into service. And for phased income producing projects, the tax credits may be taken before the completion of the entire project on the basis of what's known as a qualified progress expenditure. And that's if construction is planned for 2 or more years. Now, federal historic tax credits can be carried forward 20 years and back 1 year. The state piggyback credit for the income producing may be taken in the year the structure is placed in service, and that credit can be carried forward for 9 additional years. And a taxpayer is going to elect to take that state credit either against franchise income or gross premium taxes. And again, some of this you can see why you want to talk to your accountant or financial advisor to make sure it's all on the level and you understand and they understand what's going on. Switching over to the non-income producing tax credits, and that's what we really refer to as the homeowner's credit. And that's for non-income producing structures, and that's going to include things like private residence, multifamily residential condominiums that do not generate income, second homes or vacation property that you yourself actually use. The credit for non-income producing historic structures consists of a 15% state credit for qualifying rehabilitations of non-income producing certified historic structures. And unfortunately, there's no equivalent federal credit for such rehabilitation. A project cap limits the eligible rehabilitation expenses to $150,000 with a maximum credit of $22,500. Your rehabilitation expenditures on non-income producing projects have to exceed $10,000 in rehabilitation costs, which is, if you have an old building, putting on a roof and painting the house, you can pretty easily spend $10,000. Eligible rehab expenses have to be incurred within any 24-month period. And so your project doesn't have, there's no time limit as to how long a project can take, but somewhere within that project period, a consecutive 24-month period, that's when you have to meet that rehabilitation expense of $10,000 or more. So, you know, say your project takes 3 years, as long as somewhere in a 24-month period of those 3 years, you must exceed that rehabilitation cost. So certified rehabilitation, again, it has to meet the Secretary of Interior standards. The application for non-income producing structures are solely reviewed by our office. They don't go to the Park Service since there's no federal equivalent to it. And the project must be certified as determined by our office. As with the income producing, your qualified rehab expenses are going to include the hard rehabilitation costs that are incurred in work upon or within an existing structure, and soft costs like consultant's fee. The credits cannot be claimed against the cost of acquisition, new addition, site work, or personal property. And so taking the state credits, they have to be taken or may be taken in the year that the structure is placed into service and carried forward for an additional 9 years. You're allowed to claim state credits for rehabilitation once every 5 years, which means that you can do a project and 5 years later you can do another project on your house. State credits can be transferred with a property so long as the transfer of a property occurs before it's placed into service. So if you're in a situation where you as a homeowner are doing a tax credit and then get transferred or decide to sell that property, if you have that open application, the new owner can take on that application, just like Chip was saying that he did with his house, as long as that application is open, so that then the new owner can go ahead and do work that they want to do and claim tax credits for that. So in order to undertake a tax credit application project, there's a 3-part application process, and we at the State Preservation Office provide guidance and technical assistance on doing that. So we hold your hand through the whole application process. So all applications, both for federal and state projects, are going to be submitted to our office initially, and then we forward the federal applications on once we review them. So the application parts are the first part, which is part 1, which is the evaluation of the statement of significance. Does that property, is it National Register listed? Is it in a district? Can we certify it for being historic for the purposes of tax credit? The part 2 federal and part A state is the description of the rehabilitation. And that's where you go through and describe what the existing conditions of your property are and what your proposed work on those to remedy those conditions are. Those 2 applications are submitted before the project gets underway, or sometimes as the project's underway. The part 3 federal or the part B state application, which is the request for certification of completed work, that's only submitted at the end of the project after all your work has been completed and you're getting ready to start taking those credits. So the part 1, like I said, the evaluation of significance determines if a property is certified, it's a certified historic structure. And the part 1 is not required if your building is listed individually in the National Register, but if you're in a historic district as a contributing property, you will need to complete that part 1 application. And you need to submit that part 1 to the SHPO, our office, prior to completing the project and placing it into service. If you don't do that, you're not going to get any credit. That's an IRS regulation. So if you put the building into service prior to the submittal of the part 1 application, you're kind of out of luck. Part 2 application, which is the description of the rehabilitation, is going to determine if the proposed rehabilitation work conforms to the Secretary of Interior standards for rehabilitation. And those are the standards that we use when we review the application and what the Park Service uses to look at applications. So owners who undertake rehabilitation work prior to the submittal and approval of the Part 2 or Part A application from both the SHPO and the Park Service do so strictly at their own risk. So it's better, if you're thinking about doing a tax credit project, to consult with our office, and we can kind of get you up front, make sure all the proposed work's going to meet the standards and you'll be good to go. Now, in completing the Part 2 application, you're going to need to describe the proposed exterior work on each architectural element. And these usually include things like the roof, the masonry, porches, exterior woodwork, doors, windows, alterations, new construction and additions, even though you don't get tax credits for that, and then any site work. For the Part 2, you'll also have to provide the description of what your interior work is. So talk about what you're going to do to the floors, the walls, ceiling, woodwork, doors, any kind of structural system. If you're going to make floor plan alterations or changes, if you're going to upgrade plumbing, mechanical, HVAC, or electrical systems, all that kind of stuff you want to include a description of in your application. So the tax credit can be used to do things like updating your kitchen, updating bathrooms, new HVAC systems, all of that type of thing can be included as a qualified rehab expense. When you submit your application, you're going to have to submit 2 sets of photographs that will be submitted with the Part 2. And those photographs, they're going to include overall exterior views of the site, exterior views of each side of the building. Jump to a different part of the screen.
John, are you able to go back where you were?
Yep.
Sorry about that, John.
That's okay. Can you all see my screen?
Mm-hmm.
Yes.
Okay. So for your application submittal, you're going to submit 2 sets of photographs. And again, they're going to show exterior overall views, kind of views of the setting. You want to say for your exterior views, you want to show each side of the building, overall views of major interior rooms or spaces on each of the floors, and then photographs that are necessary to explain the rehab project. So if you're having masonry trouble, you might want to have closer up photographs of your deteriorated chimney, your mantle or paint issues, that kind of stuff. So basically what you want to do is take the reviewer on a photographic tour of your property. And when you get the instructions to the application, there's detailed instructions as to what types of photographs and how to take those photographs. So you're just not flailing around on your own. On some projects, depending on the type of work, there'll be 2 sets of drawings that will need to be submitted. And these will include existing site plan and floor plan drawings and possibly elevation drawings. And then for any proposed work, you want to have site plan, floor plan, and elevation drawings and other drawings necessary to explain the rehab project. So you might have details if you're going to change stair railing, or if you had to add a handicap ramp, you'll want to have drawings of what that would look like. For your Part 3 request for final certification, that's again the application that determines that the completed rehabilitation work conforms to the Secretary of Interior standard. And that's also submitted with 2 sets of photographs showing the after or the complete work. And the IRS, what will happen is once we certify that project, you'll get a letter both from our office and from the National Park Service that will certify that project. And what you need to do is include a copy of that certification with your tax or your tax return for every year you're claiming a portion of the credit. So you just remember to do that, or your accountant should remember to do that for you.
And John, let me jump in just a second. One thing that I want to mention about that letter is if your property is co-owned and more than one person is going to claim the tax credit, you've got to make sure that all of the names of the property owners are on that letter. It's very important.
Right. So on the Part 3 application form, what you'll see is the owner's contact information and their taxpayer identification number, but there also will be spaces where you can provide, if the property is owned jointly and you file your taxes separately, you want to add your spouse's name and their taxpayer number. Or if your project's being done as an LLC, you have a number of investors, you want to make sure that they have taxpayer ID numbers for all the investors who will take a portion of those tax credits. So it's important to have everybody on that final form to make sure that they can get the allocation of the portion of the tax credit here in the title. So just like I said, I want to just walk you through and just show you what these forms look like I can email you if anybody's interested in the forms. They're not on our website because we constantly update them. So if you want a copy of the forms, if you want to do tax credits, I'll give you my contact information at the end, and we'll put it up on the Preservation Wilson website. Y'all can contact me and I can get you the application. So this is the part one application, and basically it's a government form. This is a simple form. It's only 2 pages to fill out. Basically, you want the property name. What you're asking for is basically to certify that building is contributing to a National Registered District for the purposes of rehabilitation. It'll be the project contact. It's different from the applicant. So if your architect's filling this out, they have their contact, and then you as the applicant or the owner would sign it and attest that you actually own that property. The second page of the part one application is where you provide a description of the physical appearance of the building and the statement of significance as to why that building is important. So here's an example of a description that's basically you just want to kind of hit the highlights of what that building is. So you have, in this instance, you have a 3-story unpainted brick commercial building, and you describe the windows and the cornice, and it has an altered storefront from the 1990s, and there are 2 spaces. And so you just want to give like kind of a description. And again, you don't have to be an architect to know all the architectural terms to do this, but do the best you can. If your property is contributing in a National Register Historic District, every nomination will have an inventory list by property. And here's a page from Kinston's. And basically that description that's in the inventory list you see here, you can take that description verbatim from your property and insert it in the part one. So you don't have to reinvent the wheel. And I can send you a copy of the nomination entry for your house. So again, this isn't something you have to invent from scratch, because usually if your nomination's current and has that description, you can just block and copy and put that right in as your architectural description. Your statement of significance.
John, let me check just a second. The description of the homes in the historic districts, you can also find with the city. Within the historic districts, all of the buildings, whether they're residential or not, are classified either as being contributing or landmark or infill or whatever. And so if you don't know if your home is considered contributing or not, the city of Wilson also has that information available.
Right. And so in order for you to be able to claim that credit, you have to be contributing in that district.
Right.
Some might be aware that there's also a book that was done as part of the city and county architectural survey that we did many years ago back in the 80s. And there's a book called The Historic Resources of Wilson, North Carolina. It's written by Kate Ono, and I'm sure they have a copy there at the library. That will also have background history and description of your buildings in there. So that's also a good resource. And if you're interested in Wilson history, that's kind of a neat little book to have about if you want to take your own little architectural tour of the city. But so your statement of significance is basically you're just going to summarize how that building contributes to the significance of the district. You want to talk about the district's significance. You want to look at it to, what's the scale of the building, the style, the period, and important if you know who the architect was or if there are any significant figures from the past associated with the building. That would be interesting to know. If you're doing a commercial building, you might say this was originally the, such and such theater, or this was the so-and-so department store. So whatever little history you have in there. And again, if you have questions about what to say in this, I'm happy to help you, walk you through it. The other thing that you're going to need to include is a map showing the historic district and basically where your house is located within that district. And you can get a printout of any of the historic district maps on the city's GIS website, and you just print it out, take a magic marker and put a dot there and say, 1200 Nash Street, and there you go. So it's, again, not something that has to be beautiful. It just has to convey the information well. This is
right.
Go ahead, Chip.
No, go ahead.
Okay, this is what the part two application looks like. So again, what they're asking for is the property name. Is it individually listed or in a district? And then under section 2, it's going to want to know some project data. So what's the date of the building? How many buildings are going to be in the project? So if you have, say, an outbuilding and a historic garage, you put 2 buildings. They want to know what the start date and what your estimated completion date is in the phase project, which we'll talk about in a minute. You want to know how many phases that is. And then what they'll want to know is what your estimated rehabilitation costs are. And this can just be as close a ballpark as you can get it, because obviously you won't know what your final QREs are until the end of the project itself. They want to know what your square footage is before and after in case you're changing things or adding an addition, and what the use is. So for most of you who are doing homeowners credits, it'll just be residential, but in the case of the school, you would put use beforehand with the high school and use after is apartments, and then number of housing units that you create. And then who your project contact is, you the applicant, you attest that you actually own the project. And then what you'll see is they want a description of the existing features before you start work and what your proposed work is. And this is something that, again, you don't need to be an architect to fill this out. Just in 2, 3, 4, 5 sentences, describe what the existing conditions are, and 2, 3, 4, 5 sentences describe what your proposed work is. So say we're working on our standing seam metal roof. So our description might be circa 1910 standing seam metal roof. There's peeling paint. There's some rust areas. The gutters are rotten and falling off. Our description would be to scrape and paint that metal roof, to reinstall gutters that match the historic gutters. And then you go through basically element by element. So you describe the roof, you describe exterior siding, you describe windows, foundation, masonry, air conditioning, interior plaster, whatever areas of that project you're going to do work on. Describe what those features are. And again, that's going to be supplemented by the photographs that you take. So you take those photographs that kind of illustrate what the conditions of those features are that you're going to be working on. So here's an example from a part 2 where people have, you can see just in 1, 2 sentences, they talk about their current siding was installed about 1900. It's in pretty good condition. They're just going to scrape it and paint it. There's some rotten boards they're going to replace those to match the dimension and profile of those existing boards. They look at the windows, so it has 9/9 windows on part of it, and in the back there's some later window changes. So they're going to retain and repair the historic windows on the front, and then the later non-historic windows or the mucked up windows on the back, they're going to replace with wooden windows in a one-of-one configuration. So again, just a short, succinct description of what you're going to be doing to each one of those elements. Like I said, some buildings will require architectural drawings. So this is, something that's a building that's being converted to a microbrewery. So they have an architectural plan. Not all projects require these plans, but if you're doing a large scale project or you're making changes, you might have to have drawings like this, or if they're doing something that you'll have to have stamped drawings from a building code official, then you'll need to include those drawings with your application.
Yeah, the average homeowner with the usual project like mine, which was a whole house renovation, will not need plans like that. So don't feel intimidated by that. But the documentation otherwise that I submitted was sufficient.
All right. And usually what I try to do is, if you're looking at doing a project, I'll come out and meet with you and we can kind of walk through the house and see kind of what your project is and the details. So like Chip said, I'd say the majority of the homeowner projects that I deal with, maybe 5% of them have architectural drawings. When you do your photographs, as you see here, your photographs, as you can see in the top left of the screen, you're going to have to label the back of every photograph, the name of the property, the address, where it is, what the photo number is, and just a description, what it is. So you can handwrite that, or you can print out little stickers and paste them on the back of the photograph. And then what you want to do, make a little floor plan sketch like you see on the right. And this can just be done on graph paper at your home. Just do a little floor plan of your house, and on there, put your photo numbers and the angles so the reviewer can tell where those photographs are taken from. So Usually in the reviewer chain, I'm the only one that has the luxury of actually being able to see the house in person. So most people, the rest of our reviewers are in Raleigh. And of course, the National Park Service, they unfortunately don't get the chance to come see Wilson. So they don't ever get to see these properties in real life. So you want to key your photographs to a little sketch plan. If you're going through your project and there's going to be some changes, say you get in there and you discover there's a whole lot of termite damage that you didn't anticipate, or you decide suddenly we had twins and we need to add an addition or something like that. If there's any change in the project, what you need to do is submit an amendment sheet, and basically that's going to just summarize what the change is. And so that's not a problem to change that project as you go through, because in any old house you'll probably encounter stuff, or you might change your mind, or you decide to do something different that's maybe more appropriate or whatever. It's just a simple form, again, just describe what your amendment.
And think of that as a change in scope. So one of the things that John said earlier that's very significant that people tend to get hung up on is in the original application, you're going to be asked, how much are you going to spend? How much is this going to cost? They want to know that at that stage as much for statistical purposes as anything else. They're not going to hold you to that. And when you get into your renovation, the scope may change, which may obviously change the amount that you're spending. But don't think that you have to file an amendment just because it's costing a little more. What you plan to do costs a little more than what you originally anticipated. This is really for a change in scope.
Right, yeah, that's a good clarification. The other thing that I'll add to that, the reason that they want to know what your estimated QREs are is the review fee for these applications are based on a sliding scale as to what your rehab costs are going to be. So, and we'll go over that in more detail here in a minute. So that's another reason. So yeah, as Chip said, when you're doing an amendment, that's going to be a change in scope. The other time that you want to do an amendment, like we talked about, is if you have a situation where you as the owner decide to sell that building and you want to leave that project open for a new owner, your amendment would be to transfer who the name on that project is going to be. So you just say, you know, I'm the owner, but I'm selling it to Joe Smith, and here's his contact information. That's the amendment. And so that updates that application so the new owner can take advantage of those credits. Again, if you have situations where you're doing something different, you might have to provide additional information or manufacturer specifications or something that would supplement just the description you put in that amendment sheet. So you go through and you finish your project and you come to the Part 3 application. And again, the applications you're seeing now are for the income producing project. So again, property name, and this is where it's critical that you know exactly what your total completed rehab costs are going to be, because that's going to be what your tax credits are based on. And you see in item 2, it's going to ask you what your total estimated costs are and then what your completed costs are going to be. And you can see on the sheet on the right, that's where you have additional owners. So again, if your spouse or other investors or something, that's where you'd add their taxpayer identification number information. Fortunately, the feds give you a handy little checklist that you can go through and check just to make sure that you're not missing anything, because what has to happen in order for the review to be triggered, you have to have a complete application so they don't go back and forth and have to ask for additional information. So for the homeowner's credit, the non-income producing application, again, it looks real similar to the federal application because we based ours on the federal application. So this is your Part A, which is going to be your description of rehabilitation work. Again, this is where you're going to estimate your QREs, what the use is, if there's changes in square footage, what your project start date is going to be. The columns are ranging a little bit different, and what we did is to help owners, we went in and put the architectural features in there. So you have roof, masonry, woodwork, and it just kind of triggers you to think about, what am I doing work on? What I usually tell people, if you're not doing work on an item, you can just say NA or not appropriate. if you have work that you think you want to do, go ahead and put it in there. But if you don't get it, you're not going to be penalized for it. So say you decide you want to, in there you say, well, we're going to replace our roof. And then you get up there and see that the existing roof is fine, so you're not going to replace it. You don't have to make an amendment for that. It's just something that's not going to show up in your QRE number. So we review it as if it's going to be done, but if it's not done, they're not going to say, well, you didn't do this. So it's not going to penalize you for not doing the work. But it's better if you think you're going to do that work, go ahead and put the description in there so you're kind of good to go.
Well, and the other thing I wanted to mention, John, and I want to emphasize this, is that for these architectural features that people are going to change or that they're going to rehabilitate, there are short descriptions required, very short. You want to be right to the point. Just one short paragraph will do with the information that you're putting in.
Yeah. Now, the other thing to keep in mind is the city of Wilson, as well as other communities throughout the state, have a locally designated districts and have historic preservation commissions that oversee exterior changes to buildings in their district. So what you want to do, you're going to have to go through the certificate of appropriateness process with the local preservation commission through the local planning department. Again, Dana Corson's going to be your contact there. But what you want to do for your COA application, we've had some owners that have used their tax credit application as their COA application, even though they only deal with the exterior work. It's better to go ahead and do your tax credit application and start working with the state before you go for your COA, or do it concurrently. Oftentimes, if an applicant has the benefit of a review by the State Preservation Office and the feds, that's going to make their job a whole lot easier on the local level, because basically the local commission's design guidelines are based on the Secretary of Interior standards, so they can't be in conflict. So if we're saying it's good to go, the local commission should say it's good to go as well. So for those of you who are in a locally designated district, just keep in mind that you're going to have to work through the COA process kind of as you're going through this planning phase. We have had instances in the past where people have gone through the COA first, and the local commission has approved something that didn't really meet the standards, and they thought they were fine until it got to the review by our office and by the feds, and they found out that what we thought in their application did not meet the standards. So mindful that you don't want to get the cart before the horse and get anything wrong. So it's better to coordinate with us, early on, so you make sure everything's good to go. The sheet you see on the screen now is the attachment 1, and this is similar to the part 2 where you have your physical appearance description and your statement of significance. Unlike the federal application where this is submitted early on, the attachment 1 is usually submitted when the work's complete. So you'd submit this with your Part B application. So you can certainly submit it with your Part A if you want, but usually most people submit it with their Part B when the work has been completed. And again, this is your Part B, so this is the one that you would submit for the completion of that work. Again, if you have multiple owners or people who are going to take advantage of that tax credit, so you own it with your sister, then her name would go on there as well, so she can claim parts of the credit. Here is just this is the tax credit fee payment form for the state review, and you can see that there's a flat $250 review fee for the Part A, and then the Part B review fee is going to be based on what your QREs or your qualifying rehab expenses are going to be. So that's why they want to know what that estimate is. So in conclusion about that, I just want to say that owners are strongly recommended to consult with our office before beginning any rehab project in order to avoid potential conflicts with the standards and problems that could result in the denial of the credit. So when you do a tax credit project, it's kind of an all or nothing scenario. So if you do everything 95% great and you do 5% of it wrong, it doesn't meet the standards, that means you would not get the tax credits unless remedial work is done to bring that back into conformance with the standards. So say you totally restore your house perfectly, but you add a second story to a one-story house, that's probably going to kill you as far as the tax credit. So It's an all or nothing scenario. And again, the owners who undertake that work prior to approval from our office of the Park Service do so simply at their own risk. That's why you don't have to have approval to start, but it's best to work with our office. So in going through the application, you can start doing stuff. What I also recommend is before you touch anything, take your pictures, because those are going to be the baseline for what happens. So we've had people who have not been able to get credits because they did not have before photographs showing what the conditions of those buildings were before they started. Now, this information that I discussed today describes federal and state preservation tax credit programs in very general terms. So you definitely want to touch base with your tax advisor or the Department of Revenue or the IRS to determine the tax or financial implications of the stuff I've discussed here. So I'm not an accountant. I can't give you accounting recommendations or guidance, but we have contacts both at the Department of Revenue and the IRS, and I'm happy to talk to your accountant if they have questions, or to kind of hold your hand through that part of the process. So what I want to do now is just kind of run you through some sample projects, kind of before and after. Everybody loves to see a good before and after project of some tax credit projects as to what can be done. So this is a combined residence and store building that's in Eatonton. And you can see in the left photograph, it's kind of ratty looking, but this was actually redone by the owner as kind of a live workspace. So they actually live themselves in the house part of it and run the little cafe, coffee shop right next to them. So it's kind of a neat, what they did is actually a joint income producing and non-income producing tax credit. So what the portion that's run as the business got the income producing credit, so they got state and federal for that part of the building, and for the part that they live in, they got only the state credit, the homeowner's credit for that part of the building. This is a building in New Bern that during its history was mucked up with some really bad windows, and it was redone as an attorney's office, and they went back and restored the look of the historic windows based on that postcard you see at the bottom of the screen. Pretty successful income producing property that turned the building around. So the tax credits can be used for any type of building, any age building, any style building. You can change the function of the building, so it doesn't necessarily mean that if you have a store, it has to stay a store. So this little building in Southport could be converted to, it still looks like a store on the outside, but people actually live here. So it's converted, but it still has the look and the character of a store building. And again, that was done using the homeowner's credit. This is a bank in Kinston where the upper floors of this bank building were converted into 3 really nice apartments. It was cool. Again, didn't change the look of the building at all. This is across the street from that building. This is Kinston's skyscraper, the old Farmers and Merchants Bank, which is just incredible. And this was converted to a boutique hotel, and the owner actually kept the entire bank lobby, which is all marble, and just made that kind of like a public seating area. And there's a mezzanine, and the vault's all still there. And then the upper floors are all boutique hotel rooms. So really neat adaptive reuse for an old bank building that had been derelict for a number of years. This is a building in downtown Greenville that really got working over during the urban renewal period. You can see that on the right-hand image, they put a urban renewal facade on this building. And unfortunately, what they did is they knocked off all the really neat architectural elements. And the owner, when they peeled that back, unfortunately, they saw that a bunch of stuff had been hacked off. But as part of the tax credits, they reproduced all the missing architectural monuments, the monumental decorative work up along the cornice line. So it's really a successful project. It kind of brought back the original appearance of that building. And the tax credits really made it possible to offset the cost of reproducing some of that missing historic elements and details. There's another building in Greenville that they just redid as small commercial buildings using the tax credits. So y'all probably have seen this building, Bethune School. Again, probably one of the best school rehab projects I've ever seen. And if you've never been in there, it's worth going to see, because there's some really cool apartments, and they subdivided the classrooms in such a way that it's all reversible, and you walk down the hall, it still looks like the high school. Auditorium is just incredible. So that's a really successful use of something that for most communities, they consider the big buildings like this to be white elephant buildings, but this is just a super project for Wilson and really an exemplary school rehab project. Another building in Wilson, Western Auto, down the street from Imagination Station. And if you look at the before and after, it looks pretty much the same. And that's really one of the, probably the best compliments you can give a restoration carpenter or contractor is that, well, it looks like nothing was done. Well, that's what you want. So you preserve the historic character. This is now converted to apartments. So it still has the look of the old Western Auto. And at some point there might be commercial or live work spaces on the first floor, but that's a good adaptive reuse right there in Wilson.
And John,
here's another.
Let me pause you just a second. Go back one slide. I want to point out something that is very important. Look at those windows on the second and third floors. You don't have windows made like that every day. You can't just go out to Lowe's or Home Depot and get windows that look like that. And so when we talk about preserving a building, it's those kinds of features that you want to keep. So.
Exactly, that's part of the case.
Yeah.
This is a little building in Warrenton that also has some really cool windows that they kept. This was actually converted to the town hall meeting space for the town of Four Oaks. And again, if you look at it, it looks cleaner, but it doesn't look significantly different than it did. Historic doors were retained, historic windows retained. They just cleaned up the inside, added handicap accessible bathrooms, new air conditioning, climate control system, and it's really an up-to-date meeting space with Wi-Fi and all kinds of cool digital stuff that they can do. A lot of times we see tax credits turning around these big kind of defunct mill buildings and industrial properties. This is the Durham Hosiery Mill in Mebane. That what happened in the 50s and 60s when they introduced air conditioning, they blocked up all the historic windows. They took all the windows out of this mill and bricked up the whole thing. And as part of the tax credits, they undid that and they got steel windows. They're actually metal windows they put in there that were based on photographs of what the original windows looked like. So it recaptured the appearance of that historic building. And these are kind of upscale apartments, and there's a gymnasium and a common space in there. So there's some really neat, it's almost like a little community to itself, but really successful. Again, a building in Greensboro that was converted to an art gallery. So it still has that nice commercial look to it. This is a hosiery mill in Ashboro that was converted to loft apartments, which are really cool. The millennials love them. They're great apartments for like single people. Just really cool open floor plan and stuff. But the historic building on the outside looks just like it did when it was the hosiery mill. And then right next door to this building was the Cranford Industries office that you see, and they converted this building into like a coffee shop, espresso bar, bakery, and you see the interior has this great metal ceiling. And if you look along the side walls, they introduced air conditioning using spiral ductwork, so it's suspended below that ceiling, so you preserve the historic appearance of that ceiling. All of the original materials are there. Really sensitively, so everything other than the furniture is all just stuff that's movable. So really the only built-in stuff is that back wall that provides space for a small kitchen and then the bathroom facilities in that. So it's really a minimal change and a great adaptive use for that building. Just another building in Kernersville that was converted both to commercial use on the first floor and then apartments on the upper floor. Now with tax credits, what can be done if you have a building in this situation where you want to make condominiums out of it, you as the owner can claim the federal tax credits on this building and then sell the condominium space to a condo owner, and the condo owner themselves can use the state credits to upfit their own condo unit because since they are considered the owner of that. So you can do different projects on the same, if you have multiple owners of a historic building like this. So that's kind of another way that someone wants to do a downtown building and condoize it. That's another option to do that as well. You can see this kind of ratty looking produce company in Mount Airy was redone. Some really neat little boutique shops. The Wilkesboro Elementary School, if you look at the photograph on the right, you can see they did some really horrible things to the historic windows, like taking them out. So the new replacement windows are based on photographs of the historic windows. Again, this, like the Coon School, was done as a apartment. It's actually senior housing, so it's a elderly housing. There's parts of it where it's really ADA accessible. This railroad station, Hickory, is a really nice ice cream shop restaurant that people love. It's a store in Shelby, which, as you can see, had probably a anywhere from the 30s to the 50s reworking of the storefront with that stone veneer. And one of the things that we look at when we do tax credit projects are the later changes to these buildings, have they gained historic significance in their own right? So we determined in this instance that later storefront change was a significant historic change to that building and had to be retained as part of the tax credit, which wasn't a problem for these people. They converted this thing to a microbrewery and tasting kind of beer hall. They serve light food and stuff, but they loved the later facade anyway, so that became part of the branding. So they thought this was just great, so they didn't mind keeping that at all. Here's a situation where the tax credits were able to convert this building back to a more appropriate historic appearance. The issue with this building was, because of that later blue facade, in the National Register nomination, that property was non-contributing, so the owners were not able to take advantage of the tax credits. But what was done is they did some exploratory demolition and removed a part of that facade and saw that the historic windows and brickwork and everything were intact behind that. And then that was able to allow us to do a technical amendment to the National Register nomination, which then made that building contributing, and therefore the owner was able to take advantage of the tax credit. So if you have a building that might have some later changes that could be reversed, it's possible to have that building, the contributing status of that building, change where you might be able to take advantage of the tax credit. So had the owner not been interested in the tax credits, this building might have just stuck like it was with the kind of weird blue facade, but because they wanted the tax credits, that enabled both the contributing status to change and therefore the owner to go ahead and claim the tax credits on that building. There's a little store building in Asheville that was redone. It's kind of a really cool restaurant, kind of small scale. As you can see on the front, they had some handicap ADA access stuff that they had to come up with a solution that was appropriate for the building. So there was like those steps and a ramp that goes off to the left that was done to provide ADA access to that building. Store in Albemarle, where they converted this commercial building into a restaurant. As you can see on the interior, it really looks essentially the same. You can see all the exposed structural members, the columns. All they did was add air conditioning, lighting, booths. They constructed a kitchen and stuff. So really a low impact use to that. So there are ways to take these buildings and adaptively reuse them as for a different purpose. And the same with residential stuff. So there's ways that you can kind of do some creative things if you want to create apartments in a house. There are ways to do that sensitively, or just change the house enough if you have someone who may need ADA access. There are ways to do this in a sensitive manner that, one, is reversible, and two, does not change the character of the building itself. Unfortunately, I don't have many pictures of homeowner tax credits, because usually when you look at them, they look exactly the same before and after, because they're doing things like painting and upgrading bathrooms and replacing their roofs and stuff. But this is my contact information, and like I said, I'm certainly available by email or by telephone to answer questions. We do site visits. Fortunately, now that the pandemic is starting to ease up a little bit, we can now be on the road and actually make site visits to see people. So we're happy to come out and do that. So if there's questions in the chat room, I'll turn this back over to Ann, who can moderate those, or if Chip has anything else to say.
Well, while those questions come in, first of all, I wanted to emphasize, John, you've been a huge help to me over the years, and I know that you would be just as much help to anybody that called on you. So I want to encourage everybody to turn to John with questions about the application or general questions about renovation. There's a couple things I wanted to emphasize, though, and just to kind of get the conversation going as we're waiting on some questions coming in. The federal application that you went over is just for income producing buildings, correct?
Correct, yeah.
Yeah, and so that has not changed. But the one thing that I like about your presentation is that we've talked about commercial buildings that will remain commercial. We've talked about commercial that will become residential, residential that will become commercial, or residential that will stay residential. You've got tax credits that are available for all of those scenarios, and that's what I like about this presentation. So it's good for people to hear what the options are. One of the things I wanted to emphasize to everybody that's listening to this presentation is to make sure that you are aware of what is allowed and what isn't for whatever funding you're going for. So, like, for example, in the presentation that John was talking about, all of the tax credits are that are allowed, or the expenses that are allowed, are for things that are for the structure. Landscaping, for example, is not allowed for the tax credits. Planting of trees, that kind of thing. When I talked at the beginning of the presentation about the grants that Preservation of Wilson has available, those grants do allow for landscaping and planting of trees. So make sure that you read the rules for whatever you're applying for to see what is included and what isn't. So I just wanted to emphasize that. And the other point that I wanted to make is, as an individual taxpayer, I wanted folks to make sure that they're aware that how you get paid back is through your tax refund. So I paid in after my project was completed. Of course, I paid income tax by working here in North Carolina. And then when I filed my income tax for my refund, I filed for that tax credit. And of course, I had to have the letter that John spoke of earlier, and I have to submit that with my taxes every year. And I got back, for like almost 10 years, I got back all of my withholding. And that was a wonderful payback over the years. And so that is how you would benefit financially from going through this process. So that's just some points I wanted to emphasize.
Okay.
And what?
Well, Kathy Burney had a question earlier regarding whether or not these tax credits work for commercial properties that are located in the historic district. So I told her that I believe that, John, that you said that it does.
Yeah. So, and in fact, we've had quite a few projects that have been done in Wilson. So we're currently updating the Downtown National Register of Historic District that will expand the period significance. So there's actually going to be more buildings in the downtown district that will be contributing. And we hope to work our way through and update all of Wilson's National Register nominations to update the period significance, which will mean things that might not have been contributing because they weren't old enough might now be contributing and can get tax credits. So all the contributing properties in the downtown district would be eligible for an owner to take advantage of the tax credits, and any of your other districts, Broad Keenan, the Nash Street Historic District, any other districts in Wilson, if you're contributing property, you'd be able to take advantage of, depending on the use, again, either the homeowner's credit or the federal credit.
Yeah, a lot of people assume that a property has to be a landmark, and that's not the case. There are a lot of contributing properties throughout the historic districts, and so those are eligible. So yes, absolutely.
And it's nice to have Chip as a homeowner who's experienced this, because when I send you the application, it comes with a whole bunch of attachments, and like any state or federal paperwork, the instructions look more intimidating than the actual application. Like I said before, these are designed for you as the homeowner to sit at your kitchen table and fill it out. I'm available with questions to hold your hand, but it's just don't be intimidated by all what appears to be a monumental amount of paperwork, because it's really not.
No, it's really not that difficult. And I mean, I even went through the amendment process. And I mean, they're just wanting you to document what you're doing. And so it was a very easy process to go through, actually.
And one of the things that our office does as part of our restoration services branch, in addition to administering the tax credits, is, like I said, we provide technical assistance to all aspects of preservation for homeowners. So if you have questions on anything as simple as where can I find reproduction doorknobs, to something as complex as how I deal with structural issues, or I have to elevate my house because of flooding, we can kind of provide guidance and information on how to. And then in the past, I've done some actual hands-on preservation workshops in Wilson, like restoring windows and that kind of stuff. So there's, we can provide technical guidance, and I can certainly interface with your contractors. If you have a contractor who's doing stuff and they have questions, call me and ask. It's better to ask than flail around and wonder if you're making the right decision. That's what we're here to do. We're your tax dollars at work. Basically, we're from the state and we're here to help. How often do you hear that?
Yes.
Well, we had one more question regarding that, and it was, do you have to have a contractor for the work, or can you do it yourself for the tax credits and the loans and the grants?
So you don't have to have a contractor. The thing to keep in mind is there's no tax credit available for sweat equity. So if you yourself are doing the labor, you can't claim credits for your labor, but you can claim credits for your materials. If you have a contractor, again, which is not required, obviously the contractor's labor costs are also something you can claim the tax credits for. So no, you don't have to have a contractor, with the understanding that you don't get credits for sweat equity. And like I said, you don't have to have a contractor or architect to fill out your application either.
Just remember that for all of your expenses, you have to have copies of receipts from somebody, whether it be the materials from Lowe's or from a contractor who did the work. You need to have a copy of a receipt. And what I did is I not only had my copies, but I put everything in chronological order on a spreadsheet. And so then somebody like John could take the spreadsheet and they could sort it however they want, categorize the expenses if they wanted to, and it was very easy that way.
Great. Okay. We have one viewer who is living in Greenville and wanted to know if there was a sister organization or one like Preservation of Wilson or the Historic Preservation Office who is doing the same work as we're doing in Wilson.
In downtown Greenville, they have a couple of small organizations. So their preservation commission is really active in outreach. So they have some folks who can help you. And then Uptown Greenville has some good folks. And the Pitt County Historical Society used to be real active in that, but not so much anymore. So in the instances of that participant tonight, our office is right in downtown Greenville, right next to City Hall. So if you have questions, you can come in and talk to us directly, because we're right in your backyard. So we're kind of, we can be right up the street from you. So come on in.
Well, and John, I'm glad that question came up, because you all do work. I know your office works mostly with Eastern North Carolina, but you have connections all throughout the state. So if people are looking for organizations like Preservation of Wilson throughout the state, you could help them find them.
Yeah, that's right.
Yeah.
Okay. Another question, is there public information available on the updates to the district changes that are in process?
So currently the one that we're doing now is the Central Business Tobacco Warehouse Historic District, and that nomination we have a draft revised nomination in currently. And so what will happen with that nomination, with any other nominations that we update, usually there's a public meeting, a kickoff meeting, just to let people know what's happening. That actual nomination update, we're funding through one of our historic preservation fund grants. And then at the end, there's going to be another public meeting that will usually be hosted by the city, since the city is the grant recipient in that. And so at some point, the Preservation Commission or the city planning department will host a public information meeting. What'll happen is they'll probably put a copy of that nomination on their website. We'll have one on our website, so it's all going to be public information. And we like to do these information meetings before our National Register Advisory Committee meeting. Nominations finished and ready to go to DC for signature, just to get word out that this is a change. This is a great thing for your community. There are a lot of good incentives that come about, like the tax credits through this. So it can be a real, the National Register, while it has these great benefits like the tax credits that can go along with it, it's a great honorary designation for your community to have National Register districts and National Register properties. It's like Wilson does. It shows that there's interest in preservation, and it can raise awareness for preservation efforts in the community. So that information on the downtown district, we hope to be finishing that up sometime towards the end of August, and then we'll be having a public meeting between sometime the end of August and sometime the early part of October. And there'll be information of that on the City of Wilson's website and under the planning department.
Great. Is Preservation of Wilson's grant a one-time eligibility, or meaning if they receive it once, is that the limit?
No, it can be given to the same property owner more than once, but for different projects. So if you receive a grant for a new fence, for example, then the next time you apply, obviously that project would be over. You can apply for another project, but it is once per year. So yeah, it's not one and you're done for life. We want people to come back to us for different things that they want to do on the exterior of their home.
I had a question, and it was about the Brownfields revolving fund loan. And I was wondering about the Nadal house when we had that tank that we found that had a little leak. I was wondering if that would apply to things like that, these old underground tanks that people kept in their yards back then.
That is an example for one. That was one where that was a situation, and it was a little bit before my time with Preservation of Wilson, but I know that the board then worked with the city on that. But I don't think we applied for Brownfields funding for that cleanup. I think that we were able to do that. That was a smaller example of what you're talking about. My understanding, and I would encourage people to look up the Brownfields information through Wikipedia and other sources, but Brownfields really is for bigger chemical issues where there's been a gas tank leak or a dry cleaning chemicals that have been dumped in a larger area, and it may be in the historic district, close to the historic area, and it needs to be cleaned up. And it may not be something that a property owner knew about when they bought the property, but they need some financial assistance to help clean it up. So my point in bringing it up is that there are funds available to help for that.
Great. Does anybody else have any questions? I did have one more question for you, Chip, about your the grants that you received, and what types of projects were you able to do with the grants that you received?
Well, the tax credits that we applied for, actually the previous homeowner applied for, and I'm so glad that John brought that up, because what they did when we bought the house, they transferred all of the receipts to us. which none of it was on a spreadsheet. I had to sort out what they had applied for and what they had documentation of. But obviously, I then filed an amendment because what we wanted to do wasn't exactly square with what they had applied for. And of course, we had several conversations with John, but basically we were able to renovate the entire house, both inside and out. And what we did is we went through that application, and we each section was a room, and we also documented what we wanted to do on the exterior of the house, like the exterior siding, the back steps, the windows, whatever. And so I think that application helped guide me through the process, actually. And so we had good documentation through photographs as well. But pretty much everything interior and exterior of the house we got to include. Obviously, we didn't include any landscaping, but just about everything else that we did to this house in renovating it, we were able to include. Very few expenses I can think of that were not included.
Great.
And I've heard that from other homeowners as well, that going through the application process really helps you focus in, because a lot of times these rehab projects are so big and there's so many components to it. You're kind of in the process of picking out bathtub fixtures and all that. You kind of lose sight of what's going on. And that really, the application process really helps you kind of compartmentalize everything, get your ducks in a row, organize it. And as you go through, you might think of, oh, I didn't consider that, or I want to do this, or here's an option to do that. Because, a lot of times we'll see people that have a particular budget, and all of a sudden they find out about the tax credits. Well, that opens up a world of, money that, well, now that we have a contractor here and we can reduce our costs by, X percentage, that means the contractor can do more work. So why don't we go ahead and put the new roof on? Or why don't we go ahead and update the bathroom or do whatever that they might be not thinking about doing at one point in time. So it's, like I said, it's a good useful exercise to go through.
Yeah.
Great.
I
Well,
agree.
if nobody else has any questions or remarks, we will go ahead and conclude this webinar. I'd like to remind everybody of some little information that we mentioned at the beginning, that we do have an open house soiree at our new revolving fund property at 209 Daniel Street that will be on July 27th, starting at 5:30 and ending at 8:30. And also that if you'd like to come back later and review this presentation, we will be posting a recording of this information and a copy of the application to our website, and that should be up as early as tomorrow. So,
and you can
thank
get tax
you,
credits if you buy the
John.
Daniels house.
What's that?
You can get tax credits if you buy the Daniels house.
That's right. You sure can. Absolutely. And we will help you fill it out too. So I will help you. Thank you, John, and thank you, Chip, and thank you, attendees, for coming tonight. And without further ado, we will end this webinar. Have a great night, everybody.
Bye. Thank you.
Thank you. Bye-bye.